Where's gold gonna go? Let's go out, far out, far out. Where is gold gonna go? There is a range, that is technically a range, I would say, where we have bottoms at around 1733. We have a local bottom at 1760, but I would say that we just went up to a resistance that I want to play off, and there we go. It doesn't need to fall. It doesn't need to go anywhere. It doesn't need to listen to me at all. Okay? But just remember that you need to have consistent trading on gold, okay? Consistent trading in a trend. Do you have a trend on gold right now? No, you don't have a trend on gold right now. So this is as a lucky shot in the dark as anyone else out there that is selling signals or have an opinion. This is just my opinion, okay? That's where I would do it. Now, should you? Probably not. Are you going to sell it right now? I don't want you to. Unless you have, that is your analysis, that is your plan, that is your strategy, that is your thought process, and you are willing to take the risk. Because that is a part of your strategy. That is through your demo account, through training trades, and all that, okay?
All right, take a look right here. So pound JPY, long term, think about long term right here. Long term, we've got this big downward AV move right here. Big downswing from there, from the high to the low down here. So we've got a nice little bearish move from the top to the bottom. We've got price action moving sideways. And so if we do get a breakout to the upside right here, the upside break will just be a temporary break, right? We're going to see a temporary break to the upside, which means it's going to be a false breakout and price is going to come back down south. Now, what I always like to do is whenever we're inside a correction move, this last rally should be a 5-wave structure. If you know anything about Elliott wave, the last correction move that you have, which is the C move, right? The B to C move is normally a 5-wave structure. All right, the A to B and the B to C, we have different internal structures, and so this should be a 5-wave structure going north. So I can identify how far I could expect this price action to move before we start seeing a turnaround, because we do know that the overall directional bias is bearish. And if the overall directional bias is bearish, then let's go define what the market's going to tell us right here.
Start collecting information. Observing is the best tool you can actually apply as a day trader to collect information, guys. And yeah, so rapid movements. I actually want to talk about rapid movements. Rapid movements, let's say it's before, or the London trading session is about to open and you see a rapid movement, you can't catch that particular trade or price movement. What usually happens is it triggers a certain fear of missing out. Now, the problem with fear and regret or wishful thinking is that these are, usually innate emotions. These are very basic emotions any human being has. So trying to fight these emotions is, that's not going to work, because that's just not going to work. Fear is usually there. Biologically seen, fear is actually a good emotion, because it protects you not to be eaten by something, for example, right? It protects you from dangerous situations. So that's the reason why fighting it doesn't work. That means we have to have a closer look what actually is going on inside your mind. And as I said, rapid movements, they happen quite often. They trigger fear, they trigger regret, they trigger wishful thinking. And this, the common denominator of all these components is fear, regret, wishful thinking. Those are daydreaming. This has nothing to do with trading. You are just daydreaming. And I'm also going to talk about why you are daydreaming. This is a normal thing, actually. And the interesting part of that is, as I said, right, it triggers at some point, it doesn't matter, it doesn't even need to be a rapid movement. Let's say you missed out on an opportunity and you start now regretting that you didn't buy at that particular point, because you look down to your paper and you see, oh my gosh, my analysis was proper, right? My analysis was correct. I should have taken this trade. Now, the thing is, the problem is, the market is an unstructured place. Without the indicators, without support resistance, without all the price patterns and candlestick patterns, it's just an unstructured place, isn't it? You start drawing all these patterns, you come up with Fibonacci, you come up with these zones. This is you. You are creating it, aren't you? And you always have to be aware, and there is no solution for that. You always have to be aware that maybe you are spotting something that is just born out of your wishful thinking. Maybe you are just daydreaming because you are looking for a buying opportunity. And that's the reason, guys, think in both directions. That means always have two scenarios in the back of your mind. Yeah, always have two opposite scenarios. One for a buying scenario and one for selling scenario.
While I'm waiting for a question, I just want to point out one more thing. There was a Fibonacci play here. I talk about Fibonacci's all the time on my channel, but you know, it's just a tool that can help you get sniper entries. It's really good for beginners. I highly recommend a Fibonacci for a beginner. All right, before coming out to the 15-minute Fibonacci, it's basically this tool right here. It's used to, you can use it for a sell, that's a sell, or you can use it for a buy, right? You can use it for a buy as well. It's basically a tool that you use to hop into a continued trend. So if you think the price is going to continue to the downside here, then you would use your Fibonacci to get in at the pullback, right? Because during a downtrend, the price comes down, we got a pullback. Price comes down, we got a pullback, right? So you want to get in at the pullbacks, right? So that you can get those sniper entries. That's what the fib is for. So when you're looking at a sell for a fib, you want to take the last high. This is the last high. This is the last low, right? This is the last time price was before it decided to bounce up. You understand? So that's where you take your fib. So you do top down. Okay, we have our high and our lows. I made this gold on purpose so you can see it on stream. This is the golden zone. This is typically where price comes in to retrace. As you can see, price is retracing. Cool. All right. So on the Fibonacci, it does suggest for you to enter around this point, and it suggests you to take your profit here. All right. So I'm going to put that up here. I'm going to put entry and take profit. All right. And this is just, you know, a tool that I recommend for beginners. It's a nice, easy tool. And then we have TP. I just put TP for take profit.
USD Swiss, I just had a $12 stop loss. Could you please say where it's heading? Oh, I wish I could tell you that, Shifath. I believe it's heading towards the upside. I can give you my opinion. I can't tell you exactly where it's heading because unfortunately I don't have my crystal ball. I don't know the future. But for me, just simply loading up this chart right now, it looks decent to the downside. You look at the 4-hour, broken through structure here. Broken and closed, had a slight retest on this 4-hour. Not a retest that I personally like, but the chart is telling me it looks quite bearish. If you're, I mean, look, anything can happen, Shifath, right? It can go to the upside, of course. It can obviously go to the downside. It can do nothing. We don't know what's going to happen. However, by looking at this chart, it's possibly a failed breakout retest. And also on this daily, you can kind of see a potential head and shoulders there. And not only that, if we talk about the head and shoulders, you've got a retest of this neckline. Left shoulder, head, right shoulder, breakout, retest of the neckline, roughly around that 20, and we're moving down. Now, not only that, see these two bars here, these two hammer bars, which are bullish signs. I know this is not great for your trade, and I apologize for that. I'm just saying what I think. But whenever I see a break underneath these wicks, it's normally quite a good sign for potential move to the downside, because these are meant to be bullish signs.
So for those who has been here, for the couple of last days here with me when Nick has been on a vacation, has it been fun? Have you learned something new? And have you had a laugh? That is that is kind of the things is. And have you got a new strategy maybe to your arsenal? Have you got some new ideas? That is kind of why I'm here. What can you say about CAD CPI, sir, from Zimbabwe? CPI at the moment, I think it was 4%, unless there is some news I have not checked right now. So that is very high. That is going to continue to lead CAD stronger, meaning USD CAD going lower. At 4%, it is very high because their target is 2.5%. That means that there is whenever the unemployment rate is going back to normal, that is when they start increasing interest rates again. So when you have 4%, you're like, whoa, what's going on? That is when you need to be unemployment rate on Friday when NFP is. Look at that too. Don't just only look at NFP. Okay, and then you can see higher.